The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 1st terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that, well, just simply tools that empower human potential. Because living up to our potential, that's something you and we must master each and every day. So let's begin the day with an empowering belief. You know, most of us have no idea of the giant capacity we can immediately command. I mean, immediately command when we focus all of our resources on mastering a single area of our lives. And one of those areas of our life that I believe we should master, well, it's trading. Another area is time. You see, once we master time, we understand that we typically overestimate what we can accomplish in a year. However, we underestimate what we can achieve in a decade. You know, one reason people achieve what we truly want, or don't achieve what we truly want, is we don't focus our attention. We never concentrate our power. Many dabble their way through life, never deciding to master anything in particular. That's not you. But those are folks that you know that you could impact. Success, and you know this, success comes from taking the initiative and following up, persisting, always expressing the depth of your conviction. So the question is this: what simple action could you take today? Maybe you've already taken one. Bravo to you. If you haven't, what simple action could you take today to produce a new momentum towards success in your life? This much I know to be true. The path to success is to take action, massive determined action. There's no abiding success without commitment. If you want to be successful, find someone who has achieved the result you want and copy what they do. And guess what? You'll achieve the exact same result. It's like a recipe for making beautiful chocolate chip cookies out there. Even though you're not a baker and I'm not a baker, if somebody gives us a recipe, we can follow it, and we can achieve the same type of mastery that they might. The time is now, folks, to master anything that you want in life. Mastery, it's a beautiful thing. And lastly, let me leave you with this thought. If you absolutely knew, and I'm telling you it is the case, and if you knew that everything was going to turn out okay, how would you live your life differently today? Let's go check out the markets. Let's go see how they're living. Right now, you've got the Dow is up 16 points. It's the laggard out there, only up about 0.1%. The S&P is up 0.4%. That's up 6 points. The NASDAQ is up 0.5%. That's up 18 points plus. Russell 2000 up 0.5% as well. That's up 5 points and change. NDX 100 up 0.4%. New York Stock Exchange up 0.4% with 1,000 net advancing issues. The Bears took the ball back yesterday, but now it looks like, they're in a huddle trying to figure out what to do, trying to see if they can keep their momentum moving forward. A lot of time left in the trading session, but in the first 40 minutes of the game here, the Bears really have done nothing. In fact, they're about to lose the ball, and that is, quite frankly, bullish out there to have the oscillator slip below the zero line and only last for one day. Now, if there's not 445 net advancing issues by the end of the day, well, the Bears were able to pull it out. They had Peyton Manning come in off of the bench, because it seems like he must be on the bench if he's playing for the Bears out here. Of course, he's not the quarterback for the Bears, but I'm just having a little bit of fun out here. You could help me have some fun. Just give me a call at 877-927-6648. Be happy to take a look at your stock chart, anything you'd like. We've got Goldilocks down $32 right now, trading out at $12.95. Silver off about almost 4%, down 80 cents, trading at $20.89. You've got light sweet crude off 58 cents. We didn't take a look at light sweet crude. We'll do that. It's trading at $101.74. Looks like that's headed to the $99 mark out there. Natural gas up a nickel. Let's see, what else do we have? King dollar, really kind of flat out here. It's back about 5 cents. Over in Europe right now, the DAX is up 40 points. FTSE down 20. Get our call numbers 877-927-6648. Movers in the market out here. You've got Netflix leading the charge, the upside. That's up $9 and change. Google up $9. Cree up $5, Apple up almost $5 as well. Concho Resources, CXO up about $4, Amazon up nearly $4. Biogen, BIIB having another nice morning. That's up $3 and change. To the downside, Tesla Motor is leading, really equity-wise, is leading the dollar-wise to the downside, off $3. Not a big deal out there. You got obviously the Velocity shares, the Direction shares inside gold. Regeneron Pharmaceuticals. Boy, we'd love to see that thing pull back. Right now, it's only off $2.76. We're going to need a lot more help than that from the bears out there. You got BlackRock, BLK down 1% this morning. That's trading out at $2.67. Beacon Roofing Supplies, BECN, that's down 6%. Diamond Foods off 9%. Walker and Dunlop, that's off about 14%. Restoration Hardware down 3.5%. Let's begin by taking a look at the indexes. Let's start off by, well, first let's go take a look at the VIX index here. As Basil so affectionately calls it, VIXY out here. So let's go see what Basil's VIXY is doing. It is above the 50-day exponential moving average out there, so that is a more than a caution sign out there. And when it's above the 50-day, that's where the damage can be done in the marketplace. That 50-day exponential moving average is $14.67. It's at $16.24 right now, so that is a bit of a caution sign out there. Let's go take a look at the New York Stock Exchange. Let's go see what it actually is doing here. And if you want to take a look at strength, New York Stock Exchange has pulled back slightly below the 0.382 retracement. That's off of the last set of lows out here. Those lows being the trading session of August 30th, that price level, 92.46, a bit of change out there. Makes that high on Uncle Ben Bernanke Day. That was September the 19th. That was his going-away present to the markets, the gift out there. Hasn't made a high at 99.06. The pullback so far, as I said, 0.382 is 96.53. It's trading at 96.56. If that truly is the pullback, if we're about to see the bounce or the continuation of the A to B equals C to up pattern out here, New York Stock Exchange is going to have one heck of a nice A to B equals CD. Here's what we do know. What we do know is that the volume at these highs, it's a high volume high. So price is going to get back there and at least test that area, which is going to be the 99.06 level. But, of course, that was already breaking a B point, a larger B point right back here on the trading session of August the 2nd. So we're going to put in a couple of different A to B equals CD patterns. We'll see where it is that they all come to fruition at. But that B point was taken out with volume. We'll go ahead and we'll change that one to red. So now as we shorten this up, let's pull this back. You can see down here on the chart, you can see the oscillator yesterday slipped just slightly below zero line. That's why 445, that's the magical number that you want to be paying attention to. So the 1-to-1, A to B equals CD inside the New York Stock Exchange. That'll take you up to 10,121 out there, so that much is confirmed. The 1-to-1 on the smaller pattern, that's if it can, in fact, get above Ben Bernanke Day with some volume out there. That'll bring into play 1024 out there. That one's not the one for us to necessarily be focused on right now. It's the smaller one, the larger one from a time frame standpoint, which will take you into the 10-121. That'll also take you up into the top of the rising price channel that the New York Stock Exchange has also been traveling in. That taking us all the way back into the 2011 time frame. So that's what's going on there. We go take a look at the S&P 500. Here's the daily chart for the S&P 500. Yesterday it was making its way down to that little gap that had formed back between September 9th and September 10th, the low of which is, well, the low of the September 10th session, 1674. The top of the September 9th area, which is really the gap that we're looking at, that top is 1672. So right in there is the gap. Never made it down to that area yesterday. We'll see today. Today you could be setting up a little bull sash candle on the S&P if you get a close above 1687.26 out there. What we can see is price on the S&P 500 cash index has not pulled all the way back to the bottom of the price channel. The bottom of the price channel out there, that's the one that takes us back into November 16th. That's that's a strong area of support out there. So you've got good horizontal and you've got good diagonal support inside the S&P 500. That's on the daily chart. If we go switch over, take a look at the monthly chart. I don't think I did this during the last show, so we'll do it here right now. The last show, or if I did, I apologize, but here's the S&P 500. Had a little dark cloud cover last month, but that was just simply blown away by the bullish clouds of September, of the month of September out there. So that dark cloud cover candle, makes it somewhat irrelevant when you've got no follow through to the downside out there. So that's on the S&P, both on the daily and the monthly, the two charts that are most important to us at the moment. Of course, let's go take a look at the weakness out here. Well, that would be the Dow. Yesterday we were taking a look at the Dow. I'll blow this up here. That, too, had actually a bearish engulfing candle last month. But as I said, if you see a close above the open of the month of July, which was 14,911, somewhat negates the bearish engulfing candle, and that's important because the Dow is the weak laggard out here. Let's go take a look at the daily chart, see what it is doing here. The daily chart for the Dow, that made a 0.618 retracement. I made that yesterday. If we were to see a close now, real bullishness on the Dow would actually be a close above yesterday's open. So the number you want to write down on the Dow, that's going to be 15,249.82. If you see a close above that today, tomorrow, of course, it depends what price action looks like. That's assuming that this 0.618 retracement level holds. If this level breaks, or the low of yesterday breaks, which is 15,086.71, then just simply erase the number that I give you. But if you do see a close above 15,249.82, that's going to be a confirmed breakout, a confirmed buy. That will mean that what the Dow's done is just simply made that normal 0.618 retracement after getting into an overbought territory as it made its high on Uncle Ben Bernanke Day out there. That would then set up the A to B equals CD. Now, the A to B equals CD, that's already been confirmed here inside the Dow. That's the one coming off of the swing point from June 24th low. That's 14,551.27, the August 2nd swing point high, which is 15,658.43, all the way down to the low that was put in on August 28th. Your 1-to-1 A to B equals CD would take you up to 15,882 out there. Now, if you get above Uncle Ben Bernanke Day with volume out there, that sets up a whole nother A to B equals CD, but we'll take things one day at a time. So where is price headed to in the Dow? It's headed back to Ben Bernanke Day. Wants to just continue with that celebration or do a high five, and a high five could be a sell-off once it gets to the high of 15,709.58. But you get above it, well, it was a high five on the way up to 15,882. That's in the laggard, the Dow out there. If we take a look at the Russell 2000, this thing here, this is strong like bull. And I mean bull because you don't see any bears here. In the case of the monthly chart, inside of the Russell 2000, you just don't see it. I mean, it's just not there. The Russell 2000, it wants higher price, without a doubt. In fact, if you take a look at the monthly chart, let's take a look at the A to B equals CD on the monthly chart, coming off of the lows from 2009 up to the high of May 31st, 2011, and then that pullback, which, quite frankly, looks like a 0.382 retracement, doesn't it? Let's take a look at that retracement there on the monthly chart. About a 50% retracement. My eyes were lying to me. Sorry about that, those lion eyes out there. But the 1-to-1 A to B equals CD says Russell 2000, 1127.51 is on its target range out there. That's on the monthly chart. That's the longer term. Well, that's not really the longer term picture. That's just kind of the short term A to B equals CD on a much larger run inside the Russell 2000. 877-927-6648. We'll be right back.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is up 40 points right now. S&P is up 8. Composites up 22. Russell 2000 is up 6. We're going to go take a look at the Russell 2000. 6 minutes to go here. See if we can get the ES Mini 30-minute chart to close above 1683. It's at 1684 right now. If we do get that close above 1683, I'll go ahead and add to my initial position that I took earlier this morning. If not, I'll just sit with the existing position. But we may have seen the bottom here up until those highs from Uncle Ben Day get tested last Wednesday in the marketplace. Now, let's go take a look at the Russell 2000. Let's go see what the strong hands are showing us out here right now. They are trying to get above the only real resistance. But it's important resistance nonetheless. The only real, well, first let's take a look at what the Russell 2000 actually did yesterday. It pulled back. Now its swing point, just to be different, it doesn't like to wear the same outfit. Apparently the Russell 2000 must be just this beautiful woman out there because she didn't want to wear the same outfit that the S&P 500 and the Dow did out here, and it made its swing point high on August the 5th versus August the 2nd out there. But the real area that we're watching for where the bears are hanging out Little shooting star on September the 25th. That high is 1082. Very important to note. Right now you're 1080.33. You close above 1082, and that tells you that really by taking out that shooting star out there, that tells you that the Russell 2000 is headed to the moon, just passing one of those stars. You had also a bearish engulfing candle, albeit small, September the 27th. Nonetheless, set up resistance at 1081.32 out there. So that's the area, that's the target to be watching for, because you get a close above that, and the Russell 2000 will be making its way to higher price. We'll take a look at the IWM. We'll just go finish off the patterns inside the IWM, the SPYs for you. If we take a look at the NASDAQ composite out here, that, too, is just the ever-ready bunny. It just won't give it up. These markets cannot go down without the Russell 2000, without the NDX, without the composite, I should say, really moving down. And that just simply just doesn't have any bears out here. Of course, there's a monthly chart out here. So, that's headed to the top of its rising price channel at a minimum out there. But let's take a look at the daily chart. Of course, if we do take a look at this monthly chart, this monthly chart, you can see you're above the 0.618 retracement. And look, this is just simply the way that it works. You get above one level, it wants to go to the next level, and the next level inside the composite takes us back to 42.71. So eventually that is at least where it is headed to. But let's go take a look at, I think I got the daily chart inside this tab. As we do, I've got the daily chart. And if we take a look at really any kind of resistance out here, just because these candles are red, that doesn't mean they're bearish. That just means that the price opened up here and closed down there. And so these really are not bearish candles out here. So to try to find resistance inside the NASDAQ, I have to come, where would I really have to come to find a real significant resistance? It's just back here. It's just that simple. I mean, it's way down here. That's that little bear sash candle from August the 6th. That means that the high from August the 5th. Oh, I guess the NASDAQ was also wearing the same outfit as the Russell 2000. How about that? So that high of 36.94. So the NASDAQ has already said, you know what, sorry, don't want lower prices. And don't really pay attention to that rising price channel that it is traveling within out here, because it most certainly, it's not a breakout when it closes above that area. So that is where the composite's headed to higher price. Let's just go take a look at the ETFs. Let's just simply end this right now. Let's go take a look at those A to B equals CD patterns here. So let's take a look at it inside the Qs. The Qs here are going to make a move up to 82.80, maybe even 84.93 out there. That is not out of the question. That's the confirmed A to B equals CD, and that confirmed A to B equals CD. This is not a complicated one. This is not a complicated structure. I mean, the B point was taken out with volume, and that B point has not even been dealt with here. That's the August 5th high of 77.08. So that had volume of 15 million shares. Heck, that got above. Forget about Uncle. It didn't need Uncle Ben Bernanke. It had 25 million shares on September 9th. It just needed Stevie's son's birthday. That's all that it needed in order to confirm its A to B equals CD up. So 82.80, I say 84.93. That is not out of the question at all. That is on the Qs out there. Let's go take a look at the SPYs here. The SPYs did need Uncle Ben Bernanke to get over its swing point high. That was the August 2nd time frame, which was at 170.97, 91 million shares. Well, Uncle Ben helped him out. 203 million shares the upside. So the SPYs are going to at least test that high. As I said, either give a high five at the 173.52 or a high five and go and take price up to 178.29. I suspect that is where price wants to travel to inside the SPY out there. If we go take a look at the Dow Diamonds, of course, this is the laggard. Nonetheless, it's going to go test 157.06, but I think it can, as long as it's going to test that, might as well go tag 158.39 out there, and that's where I suspect price will head to. It's 10.29, and the ES Mini's at 1683.25. Come on, give me a little more conviction than that, my friends. 877-927-6648. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 60 points right now. S&P is up 10. Russell 2000 up 7 points. The NASDAQ Composite leading the charge here. Let's finish off the ETF structures out here. The IWM, the price projection on that, confirmed A to B equals CD up. All that was taking place yesterday was a tag of that B point. That was the August 5th level. Had 14.9 million shares out there. Yesterday, the pullback was with 45 million shares, so with some volume out here. But the Russell 2000, nonetheless, it wants to make a run to 112, more likely 115 out there before it completes its A to B equals CD up. I did go ahead and add to my position out there. We did the universe gave me that gift of getting above that 1683 level with some conviction on the ES Mini. Right now you're at 1686. 1683 ought to be a support area inside of the ES Mini. Had a question to go take a look at silver. Hi-ho silver right now. That is trading off a total of 98 cents, down nearly 5%. So let's go take a look at silver. The question was with regard to the SLV. So give you my best take on where these guys are headed to. Number one, we've got silver below a B point. That B point was Uncle Ben Day on September 18th. That low, $21.22. 34,000 contracts on that trading session. 32,000 a day. You're going to cross the B point with volume. This says get out of the way. If you're long silver, get out of the way out here, because where it wants to head down to, wants to make a run all the way back into that swing point from June the 28th. It's going to come back and it's going to test that area. Whether that's 1818, which I suspect it is, or it's the high at 1963, and really the one-to-one A to B equals CD is $19.55. But I suspect with the volume that we see at this stage, what we had explosive volume off of the C point here. That's this trading session. That's that give back from September the 20th. That's always a giveaway. Now, you know, the potential for the bulls to hold silver in place came right here this morning, and that level was tested on that following trading session on September 23rd. Again, the low 21.22 got down to a price of 21.30 on the trading session of September 23rd out there. But off the C point, that's an explosive move. We're seeing now a confirmed A to B equals CD down inside of silver, and so it says it's going to come all the way back down to the swing point. Could it go further than that? It most certainly can, but we'll just take things one moment at a time. So that is on silver. As far as the SLV, that means it'll run back to its June 28th area as well, but I would be paying more attention to the silver contract, SLV, though. We'll take a look at that. So that's showing really the same thing. Now, as far as volume is concerned, it'll take a while for volume to catch up. The volume on the SLV, and I wouldn't really use that as my benchmark. That's got 30 million shares so far today. You're down below with 8 million shares. But the A to B equals CD on the SLV, that'll take us down to a level of about 1857. But really, it's going to come all the way back down and test June 20. Of course, it all depends what's going on intra-session out there, because you got the SLV only trading basically 6.5 hours a day, where the silver contract is virtually trading all day long out there. So silver, stay out of the way of hi-ho silver. It is headed lower. Now, the beauty is that it's headed lower, and we'll see what the volume looks like as it comes into the swing point out here. Hopefully it's on lighter swing point as it tests that low out there of $18.18. Let's take a look at Goldilocks, see what gold is doing. It's also taking out trying to take out its resistance level, or support level, I should say. That's low from September 18. 1291.50 is the number. It's at 1290.70. Volume there, 136,000 contracts. It has done 135,000 contracts. So now you're getting the confirmed A to B equals CD. Let's go back. Earlier in the first show, we took a look at the 10-minute chart out there. We were clearly able to identify that seller in the marketplace. Just take a look at that big shebang. You don't want to get in the way of that. And that was between 8:30 and 8:40 a.m. 24,000 contracts coming out of there. All that's really taken place, as we mentioned, that what gold would do, what silver would do, is pretty much just move sideways in order to work off an oversold condition. That's all that it's doing. That's the most bearish thing that you can see out here. In fact, you know, it would be a rejection if you can get above the level of 13.1060. But I suspect whoever that seller is, they would love to step back in and sell at that price one more time. So somebody was unloading. Why? Who knows? But they were absolutely unloading at that time frame out there. Let's go take a look at the light sweet crude, see what it is doing out here. That looks to be headed back to the top of its consolidation level, which is right around the $99 mark right now. It's trading out at 101.33. That broke that 7-point consolidation area. So that is where light sweet crude, if it gets inside that $99 area, we'll be taking a look at $85. Of course, if we take a look at just normal retracement levels from your swing point low of April 18th, up to the high that was put in on August 28th. The 95.78 mark, that would be your normal retracement. You can see you're already below the 0.382 retracement level, which is 102.07. You're down below it now today. We have time left in the trading session, but right now you're down below that area. So 95.78 would be the next area of support that you could see inside of light sweet crude. As far as an A to B equals CD down, let's go see what that actually looks like. I would use as my A point here. Well, that's really already completing. Your first A to B equals CD down. You'd use the high of August 28th, the low of the trading session on September 3rd, and then the retracement back up to September the 6th out there. So the 1 to 1.272 is 108.49. So far we've seen a low yesterday was 101.05 out there, but I would just more take a look at not so much the A to B equals CD down here. I would just take a look at the normal consolidation levels, and that's really where it is headed to. If we take a look at good old bonds, go see where James Bond is headed to. Not really backing off that much. It did have a little doji completion yesterday at the 0.786 retracement. That says resistance then is the high of yesterday. So 133.25 is very important. Leaves are falling off the tree here today as it moves a little bit lower, but the pullback not too bad out here, but you did hit resistance with that doji candle yesterday. Very important. You get above that, then it's a continuation move to continue on at least to the 135-ish level out there. If we take a look at natural gas, we were looking at this yesterday. Natural gas here now looking like it's setting up an actual buy. Looks like it's setting up the A to B equals CD. Boy, the concern is that descending price channel. It's going to have to break that in order to really fulfill that 1-to-1 A to B equals CD up in the 419 level. You know, if we go back here at the 30-minute chart here inside of the ES Mini, it's broken now, that descending price channel. Could come back and test it, but 1683 should be a good level of support. We're getting up towards that area here where we should see a move sideways to pulling back just a bit. You can also see it's made a 1.272 expansion of a set of swing points, so I would not be surprised at all to see the ES Mini pull back, maybe come back and test that 1683 level. On the RSI 14, it's not over bought just yet, but you could see that take place if we see a run-up and a move towards its session highs out there. Again, the important thing, and it was the signal was coming earlier when we took a look at the New York Stock Exchange, and net advancing issues. It was pretty substantial. It's even more now. It was a 2-to-1 ratio, as the Dow, if you only paid attention to the top line number, you would have really not been able to figure this call out. But if we took a look at the New York Stock Exchange, it was a 2-to-1 in net advancing issues. Leading. Now we're up to a 3-to-1 level out there. So we got good market breadth. This is not a bounce here that's being led by a handful of stocks in the marketplace. In fact, if we go take a look at the equal weighted indexes out here, that's probably even a better way to take a look at it. And old Stevie Son, he can do that for you. Let's go take a look at the equal weighted. Let's look at the equal weighted for the S&P 500. That's what we're looking at right here. And if we take a look at what the equal weighted S&P 500 did. By the way, that ticker symbol is RSP. Has not made the 0.618 retracement. If you take a look at that blue line, the blue squiggly line and the red squiggly line out there, that's your 9 and 18 day. It's a lagging indicator, but nonetheless, it's a good lagging indicator, and it's one that still is in bullish mode, even with that pullback that we've had thus far out here. So this chart here still looks fine. You can see also price getting into an overbought condition, so it had to work its way off one of two ways, sideways or sideways and down out there. Let's go see what the equal weighted Qs ETF, that's the QQEW out here. And the QQEW, well, that really, what was the pullback on this? Minuscule, if anything. That's from the swing point low to the swing point high. Never made it to the 0.382. Never made a dead cat bounce. Folks, that is strength. Right now, it's trading, going to trade up into the swing point. It's already in the swing point from September 19th out there, the low of which is 33.90. You're at 33.89. Volume on that was 77. I don't necessarily suggest you trade this, but this is if you were more interested in an equal weighted ETF versus the weighted version, which is the SPYs out there. The RSP is for the S&P, and the QQE QQEW is for the NASDAQ 100. So 77,000 shares up there so far today. You've done, how about this? So here's the equal weighted. You want to talk about conviction now behind a move higher? The equal weighted already has 51,000 shares today as it's moving up into that swing point. And we are only 44 minutes into the trading session out there. That's pretty big. That's pretty powerful. So that you can see here, this is not a move that's being controlled by just a handful of stocks. There's a lot of buying that is going on out there. The volatility index is pulling back. It's down 72 cents. Not that big of a deal. It still is above that 50-day exponential moving average. But we're seeing here inside the marketplace that these highs from last Wednesday, they're going to get tagged, and not only are they going to get tagged, we're going to get beyond those highs inside before we start taking a look at what the next move really might be inside of the marketplace. If we take a quick peek over at what haven't we looked? Let's go look at the world markets out here. Let's go see what we've got going on around the world. If we take a look at the Nikkei, traded down a bit. You got Abe. He's coming out saying, "Hey, I'm going to tax you folks. I'm going to increase the sales tax." And he's going to. He hasn't given the details on that, but he did say that that was going to take place, I believe, in 2014. Maybe it's January 2014. And he said, "Oh, by the way, I'm going to fill the pot up with another. What was it? It's like 58 billion." Dollars, but in yen it's like a trillion. I don't know how many trillions or what have you, but he's out there priming the pumps. They got those printers moving out there. We'll see how much of a disappointment the Nikkei is tonight with that news. I believe that news came out after the Nikkei was closed out there. But this Nikkei did have that 1.272 butterfly, and it's making that 100% move of a move. But really, what the Nikkei wants to do, darn shame, but wants to make its move up to 15,724. It's closed out last night at 14,484 out there. This larger pattern, once it breaks above the area of July 19th's high, 14,953. I'll have to erase the yellow looking. Well, it'll form a potential new one because we can see it's only been this one here is only a 70% retracement. So it's possible. Well, if it makes that A to B equals CD, this yellow looking Gartley buy, which is what I was looking for, you hate to use that word hoping for, but I was planning for it really is more like I wasn't hoping for it, just simply planning for it. Looks like those plans may be headed out the door, and we'll just have to look for the next pattern inside of the Nikkei. If we go take a look at the what's going on over in the Shanghai? The Shanghai out here, that closed out at 2276. We'll see here. You did have that nice down thrusting candle back here on September the 26th. So this pattern is still in play out here. That's that little rising price channel. We've got the A to B equals CD down. That should take us towards that level, towards the bottom of that area. Could even spike down into the 22, 28 area. And this is one that I'd like to be able to buy. We'll see if, in fact, it can push down there. So still waiting on this one to fulfill its move to the downside out here. We'll see if that one takes place. If, in fact, it does, then Stevie's son will be all over that trade out there. What else? Let's go take a look at some of the stocks here. Let's look at the core stocks, see what's going on inside the core holdings out here, IBM, ExxonMobil, equities like that. Let's go see what they are doing in today's market, see what kind of signals we've got. Let's look at ExxonMobil. ExxonMobil here, XOM, should be right in front of me. It is. It's just exit stage left. It's right over there. So ExxonMobil here, yesterday forming a little doji candle. Doesn't mean anything out there. In fact, ExxonMobil looks more like it wants to go ahead and test the bottom of the consolidation range, which would be down at the lows of $85 or so. The last time that the ExxonMobil was down there was on the trading session of April the 17th. If I put a black line across the screen, you can see we're down there. Now, I believe we're down there on, let's see, that was 17 million shares versus yesterday was 17 million shares. So we're down on similar type volume. It would be nice for it to back off a bit, get down to that $85 range, do it on light volume, and then you can go ahead and take a trade there, or you can take a trade, quite frankly, on the DIG. Yeah, I think that's the long, with ExxonMobil representing a huge portion. Of course, Chevron is the second weighting. You got to take a look at Chevron, Schlumberger, ExxonMobil. That will pretty much do you. If we take a look at IBM, let's go see what IBM is doing out here. IBM is up a bit today. Let's go see if there's any volume behind this move. Of course, what IBM has now done, it just backed off into its last little gap area and potential break. Let's take a look at the retracement here. Probably should be paying attention to this. The retracement low from August 28th out to the high out here on September 18th. And, yeah, it was a 0.786 retracement. 877-927-6648. We'll be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Laggards inside the Dow here. You got Chevron. I talked about ExxonMobil, so Chevron here is trading down. That's a laggard. It's down 28 cents. Walmart is off 24 cents. Boeing down 15. Travelers off 15 cents. DuPont down 10. J.P. Morgan is basically flat, off 3 pennies. Alcoa down 2 cents. I don't know about you folks out there, but I am looking forward to my health care costs coming down. You know, I pay for a family of 5. Everybody is healthy. I pay $18,000 a year for the privilege of not using our insurance. Yeah, $18,000 a year is what we pay. That's got a high deductible, probably like around $4,000, something like around $4,000. Maybe it's even a little bit more. It might be $4,800 for all I know. That means that, I'm paying out of pocket the first $4,800 for a group of people that are basically healthy. So you got to rack up some decent. So, I've got that for catastrophic insurance for something that could go wrong out there. Now, my premiums up until, I think the premiums went ahead and they kicked back in. They go up this month here, so the month of October. They were like $1,400 and change. They went up to $1,600 and change. And I have hardly used that policy. I don't know that we've dipped into that policy for years out there. So I don't know about you, but, man, I'm looking forward to my insurance bill coming down. What's the likelihood that that's going to happen out there? In any event, I digress. Let's go take a look here at the XLF. Let me show you a cool pattern out here. Now, on the daily chart, if you take a look at the XLF, it's got a big, huge island. Almost looks like Ireland out here. There's a type of island that it built. This was the island that began on September the 16th. You had a gap up from the trading session of September the 13th. Price stayed up in that area, and then you had a gap down on September 23rd. That created an entire week's worth of a island out there, folks. An island out there. Island reversal. So the XLF, mighty, mighty bearish out here. Now today, you get a close above yesterday's high, 20.01. You're 20.02 right now. Guess what? You've got a confirmed buy, and it says that price is probably going to at least go visit the trading session of September 23rd. It's going to maybe try to go rescue all those passengers, all those folks that were left behind in that island on September 20th, and they're looking for a little bit of rescue. How would you like to be the group that bought during those 5 trading sessions and know that you're on an island potentially stranded? But that's not really, that's a bearish pattern. But the more bearish pattern, that is this one. Actually, let me switch over to this chart here. I don't have to do that. Let me go take a look at my weekly charts here. And this one, this is one of the most difficult island reversal patterns that you can find. It's called a Doji Star Abandoned Baby Top. It is really, not really difficult. It's really difficult in order to create this pattern here. You've got here, if you take a look at the trading session from the week of September 13th, again, that high, $20.30. You gap up the low of the next trading session, $20.38. Of course, in the following week, the high of that session is $20.33. And it formed a doji up at highs. Up at these highs here, which there was already resistance. So the resistance area was the week of August 9th. You've got that little bearish engulfing candle out there. And so you've got that doji out there, which when it comes into resistance means a whole heck of a lot more to me than it does at support, because fear is way bigger emotion than greed out there. So this tells you that buyers have absolutely dried up out here. But this, folks, I look and I've looked through charts to find the abandoned baby tops. They're hard to really find out here. So you get the most bearish of patterns. Now, if in fact that island formation gets taken out, it's going to tell you you've got a major momentum move in play, because it really shouldn't. You should see a move back into the rising price channel. In fact, with that kind of pattern, the XLF ought to pull all the way back down into the 17-ish range out here, at least the trend line coming off of October of 2011. Well, folks, our Tuesday is over. Well, it's really just beginning, because you can go ride the wave with Basil Chapman. Then we got the Options Hour. We've got Daryl Martin after that, David White, Andy Hecht, and then our man, Mr. Tom O'Brien from 4 to 6. Have a great Tuesday, folks. Look forward to seeing you tomorrow morning. Take care.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, and long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. a position. Subscribers sold recently for plus 42% on parts and plus 64% on rest. And Hertz Global has a core position for 6 months. A current position entered as a turnaround company is trading over 100% of its entry point as a portion sold earlier for a plus 21% gain. Subscribers to the opening call see the Chapman Wave techniques demonstrated and explained daily to also educate investors. Now you can get a free 2-week trial. Basil Chapman's newsletter, The Opening Call. Just visit the front page of TFNN.com.